Imagine billions of dollars being burned each year due to missing tax-saving chances. Numerous people overpay their taxes each year, frequently without realizing it. You've arrived at Moneycraft Masters if the prospect of wasting your money worries you. Our trip through tax efficiency today reveals legal techniques to maximize every dollar throughout tax season. This guide aims to maximize your financial potential, whether you're a person, investor, or business owner. Let's begin. Before learning sophisticated tax-saving tactics, we first understand certain basics. Imagine building a house. You wouldn't start with the roof, right? Understanding tax efficiency principles offers us a solid basis. Firstly, what is tax efficiency? Tax efficiency is lawfully reducing taxes and boosting after-tax value. It's about balancing government debt and personal income without breaking the law. The U.S. has progressive taxes. This implies that when your income rises, you'll be in a higher tax bracket and pay a bigger percentage. However, being in a bracket doesn't mean all your income is taxed at that rate. Only income in each bracket is taxed at that rate. The difference between tax evasion and tax avoidance is significant. Tax evasion, not reporting all taxable income or exaggerating deductions, can result in jail time. Instead, tax avoidance involves lawful measures like those we're discussing today to lower taxable income, intelligent financial planning without overstepping. With these foundational concepts in place, we can dive deeper into specific strategies and tools available to help you navigate the tax maze and come out ahead. Section 1: Individual Tax Strategies. Now that we know the basics, let's start with individual tax plans. There are several ways to maximize your taxes as an employee, retiree, or individual. Retirement accounts first. Saving for retirement is encouraged by the government. 401(k) IRAs and Roth IRAs are tax shielding and retirement savings instruments. Contributions to traditional 401s and IRAs decrease your taxable income, helping you save now and build wealth later. Roth accounts use post-tax funds. There's no immediate tax advantage, but retirement withdrawals are tax-free. CS and FSAs are next. These accounts are a blessing amid escalating healthcare bills. They let you save pre-tax for medical bills. With a high-deductible health plan, an HSA allows tax-free growth and withdrawals for eligible medical costs. FSAs, on the other hand, enable pre-tax cash to pay for out-of-pocket expenditures but must be used during the plan year. Now, tax credits versus deductions. Both lower taxes but in different ways. Tax credits lower your tax burden dollar for dollar. Consider the child or earned income tax credit, which can dramatically reduce your tax bill. However, deductions lower taxable income. Your taxable income decreases with additional deductions. The final option is itemizing deductions. The standard deduction reduces taxable income, but itemizing deductions like mortgage interest, charity donations, and medical expenditures can save more. Crunching the data and choosing the best option is critical. This is just the tip of individual tax optimization, but every taxpayer should examine these techniques. Remember, earning more and retaining more is crucial. Section 2: Investment Tax Strategies. Next, investments. Smart investing involves knowing how taxes affect returns and choosing the correct stocks and assets. Strategic tax actions can help you keep more of your hard-earned returns. Start with tax-efficient investing. Did you realize tax-wise investment funds vary? Some funds have more taxable events. Tax-efficient funds reduce these events, lowering your tax bill. Limiting trading frequency or selectively realizing earnings and losses does this. Tax loss harvesting may minimize your tax payment when you sell investments at a loss to offset capital gains, like making lemonade from lemons. Let's discuss capital gains tax. Selling an investment generates taxable capital gains. The tax rate depends on how long you've kept the investment, so planning is essential. Capital gains on assets held for less than a year are taxed more. How about holding onto your investments for over a year? Long-term capital gains are taxed at a lower rate. Patience pays off. Finally, for aspiring real estate moguls, we have tips. Tax advantages are specific to real estate investing. Depreciation provides a considerable benefit. Property owners may deduct a percentage of their cost each year, lowering taxable income. When to sell? Here comes the 1031 exchange. By rolling over sold property earnings into a new one, You can avoid capital gains tax and keep your money working. Investment tax techniques are extensive and complicated. Understanding these tools and strategies optimizes returns and creates lasting wealth. Don't only make money, keep it. Section 3. Business self-employed tax strategies. We now explore the dynamic world of business and self-employment. Entrepreneurs and freelancers face unique tax issues, but also many efficiency potential. Let's uncover game-changing techniques for company owners and freelancers. Start with choosing the proper business structure. The tax ramifications of choosing a sole proprietorship LLC S Corp or C Corp are significant. Although sole proprietorships are more straightforward, they may incur higher self-employment taxes. However, S Corps can allow owners to distribute some income, minimizing Social Security and Medicare taxes. Understanding each structure's intricacies will help you pick the optimum operational and tax structure for your circumstance. The business deductions await. This wide terrain allows you to deduct practically every company expense, from office supplies and rent to business travel and education. However, detailed record keeping is essential. Proper paperwork saves you throughout tax season and protects you from audits. The self-employed prioritize self-employment tax deductions. Self-employment tax can be burdensome, but you can deduct the employer equivalent percentage from your adjusted gross income. This solely impacts income tax, not net earnings or self-employment tax. Other gems include the home office deduction, business car use, and health insurance costs. E-business and self-employment are complicated, but with the correct tactics, they provide huge tax optimization prospects. These tools can help you build your firm and navigate taxation. Tax planning, the financial success blueprint narrator. Understanding individual investment and company tax strategies is essential since they're not independent methods. A coherent approach is needed to harness their strength. Welcome to tax planning, a comprehensive strategy to legally and efficiently manage taxes. Tax planning is about forethought. It's predicting your tax status and creating ways to reduce liabilities. You manage and prepare for tax concerns rather than reacting or scrambling at the end of the fiscal year. Year-round vigilance is key. Taxes go beyond April. By monitoring your finances year-round, you may capture opportunities and avoid mistakes. Increasing deductions now might offset a prospective income increase later in the year. Consultation with professionals is another cornerstone. Tax regulations are complex and changing. Consulting a trained tax counselor or CPA goes beyond compliance to uncover opportunities and tactics you might miss. Their advice may guide your company, investment, and life decisions. Finally, be flexible. The personal and global financial picture can alter. Your tax approach should change with the circumstances. Flexibility guarantees you're always in the best position, whether a career move, a house sale, or tax law changes. Tax preparation is effectively your financial blueprint. Be strategic, knowledgeable, and ahead of the curve. Tax planning lets you choose your tax journey rather than merely reacting to it. We've covered individual, investment, company, and proactive tax planning. Each has distinct possibilities and difficulties, but educated decision-making unites them. Tax efficiency requires knowledge and action. This guide provides a solid basis, but it's only the start. Regulatory changes, economic upheavals, and life changes influence the tax environment. Staying informed, educating yourself, and obtaining professional guidance keeps you ahead of the curve. Taxes, like life, are about overcoming and converting obstacles into opportunities. Today's tactics and insights prepare you with confidence and clarity for tax season and the financial journey ahead. We appreciate your participation in this exploration to a brighter, more empowered financial future for everybody. Until next time, be aware and proactive, and let's maximize every dollar.